Hey, afternoon, everybody. Take a look back here at what happened today. We'll go on this 4 hour because we liked that 4 hour fair value gap we were using. So if we look quickly, we've just been continuing to press higher and higher. We've been talking about we're not trying to call a top yet in this market. So as long as we continue to press higher, we'll look for that to continue. We created this most recently formed 4 hour discount here in the form of this fair value gap. During CPI, we wick higher, creating a false high, trade into that low perfectly, holding the candle bodies, and then we accelerate into a daily volume imbalance here. On the 1 minute chart now, you'll see that we have a 1 hour inside of that 4 hour sell side as well. So that was kind of our objective for the morning, seeing if we can't return lower to continue higher. Right, we weren't expecting price to continue to break lower, but we were looking for a short-term retracement to return into untouched discounts before price would continue to run buy-side targets. Quickly we'll show after holding this 1 hour, notice how the candle bodies stay above this liquidity level. We create a little short-term fair value gap on the 1 hour chart that's aligned with our daily volume imbalance. So we would expect an area like this to hold price if we're going higher. Lo and behold, right, we wick into that beautifully. Once again, candle body's not getting really near that level at all before accelerating into buy side here and ultimately that daily volume imbalance. 15-minute chart now. We spoke this morning how we had some key levels aligned with this original 15-minute fair value gap. So I'm going to move these for now. New day opening gap level, we have our midnight level, a daily volume imbalance, and the previous day's high here. We had seen this 15-minute fair value gap, right, bearish fair value gap, and we had mentioned how we would not expect a fair value gap like this to hold bearishly and deliver like a YouTube model would deliver. Right, a lot of people are going to see this as a short-term high being cleared, a break in structure, and this a good area to short. We were looking for higher prices, right? We're not trying to call a top. So we're looking for higher prices. We had called out that we had this daily volume imbalance up here. So we were looking for this to become an inversion, right? So for price to get above that, use it as support to now attack buy side. That happens real beautifully, right? We first get above all these key areas. So that midnight, the daily volume imbalance, hold yesterday's high. Once we get above those levels, right, we find short-term support. When we finally clear this 15-minute, that comes here with this candle. Notice how we're doing that with a fair value gap. So we would now really expect this fair value gap here to act as an inversion. Right, we come back into consequent encroachment of that, get above it, and from there we continue to run. Slight hesitation at 8:30. On a lower time frame, you'll see this fair value gap we mentioned as well. So slight hesitation in there before ultimately getting up and through. Right, another 15-minute fair value gap here. So higher time frame, just continue to deliver bullishly. As we work down to the lower time frames, we'll continue to see that. Let's go straight to this one. We'll kind of explain our only entry for today. So this level I've pulled up here is the 4-hour volume imbalance. Okay, this is the low, midpoint, high of it. So here now in CPI, this is the 1 minute chart. You'll see that we create this wick lower to clear out now all these lows. So we've cleared out sell side here, sell side here. We leave these equal lows, instead holding at the midnight level, the daily volume imbalance and yesterday's high. After creating this wick, we now return up higher and start wicking into this volume imbalance. So at this point, we were looking to see, do we want to continue to push higher? CPI is usually one-sided, so if it wants to go in this direction up, after clearing these short-term lows, it should continue to expand. We mentioned how we would now look for consequent encroachment of this wick to hold us. Right, if we were going to go higher, there's no need to return below that. If we were going to close below consequent encroachment, and especially below this wick, we understood price was going to continue to deliver for lower targets. So as we see price now hold the higher time frame premium, return lower. Within here, right, this is that fair value gap we had. The 1 minute here. But now we're creating a bearish 1 minute fair value gap, and now we're closing underneath consequent encroachment. We leave behind two bearish fair value gaps. We mentioned that we would want this one to hold us. We see that we actually wick into the higher one. So we do wick into the higher one, but notice how this lower fair value gap holds the bodies. That's nice to see. And now we start to attack this low here. So we wick into it once, twice. Notice when we finally close below it, we're doing it with a fair value gap. So as we now close below this wick with a new premium in the form of this fair value gap, while at the same time, right, closing underneath the midnight level, closing underneath the daily volume imbalance and the previous day high, we understand this is going to be a key level that offers us resistance, and we have no need to return back into higher fair value gaps here. Right, so like this one, this is going to become a breakaway gap. We have no need to get back up into that, and we would expect that this wick here holds us. So as price trades back up into that fair value gap, we go short. Right, we're shorting this fair value gap, stop above this swing high. Our target was simply now the 1 hour fair value gap here. So let me bring back these levels. We have a 1 hour fair value gap here. We have sell side liquidity resting here. And then we have the 4 hour as well overlapped. So a lot of discounts. We were simply aiming for that 1 hour fair value gap, especially because it's paired with this swing low. So as we enter, right, we take a little bit of drawdown, but we hold those levels like we're expecting. Hold yesterday's high beautifully with the midnight. Displace lower through our new day opening gap. That most recent premium now holds us as well. Right, notice we return into the original fair value gap too with the bodies. So returning back into those premiums, breaking through this, creating an inversion. We mentioned how we wouldn't expect a fair value gap like this to hold bullishly. We'd want to see that be traded through. It does. Then offers us resistance. And ultimately, we get out at that sell side paired with the 1 hour fair value gap. So that was all we were looking for, right? We were content with that. Nice move, catching that run lower into sell side objectives. You'll notice we did give an extended run lower, perfectly into the low of the 4 hour fair value gap. So beautiful delivery, perfectly repricing to that level. And now we start breaking all the premiums on this leg lower, right? So we're getting back above volume imbalances, fair value gaps on this leg higher. If we're going to do that, we would expect a return back into this range. So you'll notice how this original fair value gap here that we use at 930, right, as well as this one here, when we get back above those levels, notice how we're also getting back above the 4 hour fair value gap. So we have the 4 hour fair value gap here. We have this 1 minute inversion. This candle closes above both, creating an inversion aligned with the high of that 4 hour fair value gap. We would expect an error like this to hold us, but it offers beautiful support. You can understand that errors like this would hold, especially with our swing low created here. So that inversion holds us and returns us back into now, right, untouched inefficiencies that were created here. We're going to move consequent encroachment. But now remember, right, we have a 15 minute, so this is a higher time frame fair value gap. On this move lower, we have this higher time frame fair value gap that price will want to return into on the way up. So now we just start putting in bullish delivery. Right, we get back above this fair value gap. We get back above this here. Notice we're getting above these levels. Down close candles are now supporting price. So these areas are holding us. We break above our new day opening gap, doing that with a volume imbalance. So now we would expect our new day opening gap paired with that volume imbalance to hold price. It does nicely. Right, fair value gap there as well. A little bit of consolidation, but overall we continue to dig up into now that 15 minute. So we consolidate around that 15 minute fair value gap for a little bit of time. Ultimately, we get one more stab lower into this 1 minute fair value gap here that was untouched. So at this point, we had mentioned how we want to see that 15 minute give way. Right, we're not expecting price to return lower off of it. As we come into it, we can hesitate, but eventually we want to see price expand through that. You'll notice how when we first create the highs, they're equal highs. So we like to see that because now we have engineered buy side to attack at a future point. And if we're already expecting higher prices, that's just the kind of delivery we would want to see. So ultimately, we create this consolidation here heading into lunch. Now, during the lunch hour, we run out to run all those short-term lows. So we're clearing sell-side liquidity, returning into a discount, and that's what we end up holding. We now accelerate back above that 15 minute. And then from here, we really just continue to expand higher. Right, so after clearing that buy side for the first time, we hit the 1 minute fair value gap. After hitting that 1 minute fair value gap, we do get a slight retracement back into untouched inefficiencies here. Because if we notice on this leg from low to high, on the way up into this fair value gap target, we leave behind a lot of untouched inefficiencies. Right, so fair value gap, volume imbalance, we don't really return into any of those. So after hitting that objective, we can then expect a retracement. That's what we get, coming back into that volume imbalance beautifully. We have a breaker in here as well, order block, consecutive down close candles. So a nice area to offer us support. We'll now expect that 15-minute here to act as support as well, because we've closed above it with this candle. So now that we've closed above it and confirmed that on a 15-minute chart, this return into the 15-minute should be seen as a retracement that will be met with support right once we hit these discounts. Ultimately, we do hold at those discounts, displace again above the 15-minute, and at that point, you're fully confirmed to trust that that most recent fair value gap here will hold us. Right, we've returned back into consequent encroachment of the 15-minute inversion. We displace aggressively coming out of the lunch hour, leaving behind a fair value gap. And now we use that fair value gap as support to deliver us higher into our objective here ultimately, which was buy side. So you'll see that this fair value gap holds us nicely. We do give one little turtle soup entry, right? So clearing a short-term low here. Short-term low cleared. You'll notice how we create an inversion. So as we run that low, we have a bearish fair value gap. If we can clear that, we would expect that to offer us support. We close above it here. We now find support multiple times, while also leaving this 1 minute. So all these areas in here offer us support, right? Many opportunities to go long. We start expanding, slight hesitation. Once again, returning into a discount. This volume imbalance immediately would stand out to us because this candle never returns into this candle's close. So it's an important sensitive volume imbalance, right? When we open, it's all one-sided, never returning lower, unlike this one. Notice how this candle wicks into the close. This one never does. So that becomes our key level. We wick into it, holding the candle bodies beautifully, and then continue to expand. From there, once again, volume imbalances hold us. And in here, just all bullish order flow, right? So down close candles hold us, discounts hold us, volume imbalance. Down close candle, we break again. Down close candle holds us, we break again. Volume imbalance here holds us. So you can really see the opportunity to stack in pyramid positions once we're trading up and through this area. We get above now that 1 minute fair value gap. And when we do that, close above this 1 minute, obviously now the next buy side target became that swing high here that we formed during CPI. So ultimately during power hour, that's what we see happening. We accelerate up into that buy side pool, and then power hour just kind of consolidates there for a little bit. We have a 5 minute fair value gap here. So after hitting that buy side, we give 1, 2, 3 drives, short-term retracement to clear out the kind of origination of those 3 drives. But you'll see that we still find support inside that 5 minute that was now paired with a 1 minute fair value gap here. Notice how the 5 minute, or the 15, excuse me, and the 1 minute have the same consequent encroachment. That's what we like to see. So we wick a lot in here, but the bodies hold. Right? So ugly delivery, but the key levels are holding. That's what's important. And then now following 350, like we often speak of, where we have another opportunity. So this is that daily volume imbalance that has yet to be hit. Notice how now we accelerate above the 15 minute, breaking structure at this high and leaving a fair value gap as we leave there. So the signatures that we like to see, right? Leaving higher time frame fair value gaps with lower time frame ones. We hold that level beautifully and accelerate into the daily volume imbalance. And I mean, look at that precision there. Right? Hard to argue the legitimacy of the concepts and the precision they allow when we see things like this repeat every day. So going perfectly from consequent encroachment, right? Let's look at this here. Wicks hit consequent encroachment, bodies hold the 15 minute, accelerating perfectly into volume imbalance, right? Look at that precision. And now that's kind of where we've been sitting. So overall, not a bad day, right? Just shorts for us. We kind of let the rest of this play out, but it was nice to see the idea come to fruition. So once again, not trying to call tops. We would expect this fair value gap to be traded through. It does into our buy side objective, right? A lot of people are probably trying to short this fair value gap, even ICT students. That's why these concepts will also never stop working. Because if you don't understand narrative, the concepts without narrative simply patterns, right? So just retail trading. But all in all, targets are met. So nice to see. Going forward, we have FOMC tomorrow, so we're not interested in the morning at all. Honestly, I don't want to hold any bias. We've hit really our objective of that daily volume imbalance. So going into tomorrow, I'm just going to let the morning play out. We'll meet up in the afternoon, and when we meet up then, I'll kind of share what we should expect to happen. But yeah, until then, have a good night, everybody, and we will talk tomorrow afternoon. Take care and be safe.